Welcome to the deep dive.
Yeah.
If you're plugged into the crypto world, you know things move incredibly fast. Just constant headlines, right?
Absolutely. Every day it feels like a week sometimes.
Exactly. But beneath all that surface noise, there are some really significant, foundational shifts happening.
That's right.
So today, we want to cut through that. Our mission, really, is to dive deep into some recent reports, analyses, and just pull out the insights that actually matter, those moments that give you that aha understanding.
Yeah, and it's fascinating how these things that seem separate, a new law here, a huge trade there, a tech upgrade, they actually connect. They paint this picture of an ecosystem that's, well, it's maturing fast.
Maturing, yeah.
And the big question we're wrestling with, and maybe you are too listening in, is, are these shifts really signaling a new era? Like, are we moving into proper mainstream crypto integration beyond just the speculative side?
That's the core question.
Mm-hmm.
Okay, let's dive in. We're starting with something that maybe sounds a bit dry, the Genius Act.
Mm-hmm.
But it's actually really interesting, a federal playbook for stablecoins. What does this really mean?
Well, what happened is the U.S. basically passed its first dedicated federal law just for stablecoins. It sets up a whole licensing system for what they call permitted payment stablecoin issuers.
Okay, permitted issuers.
Right. And the requirements are pretty strict. You're talking monthly attestations, full backing with highly liquid assets, HQLA, keeping reserves separate, and of course, clear anti-money laundering rules.
Mm-hmm.
And maybe the most crucial part, the bill states very clearly that these qualifying stablecoins are not securities. It's essentially paving a regulated runway for compliant dollar tokens.
Not securities. That
Yeah.
feels huge. So with this clear framework and that classification, you mentioned this idea of stablecoins becoming programmable cash rails.
Yeah.
What does that actually look like? Why is that so significant?
Yeah, I think it's huge because stablecoins are already, by far the biggest real use case in crypto today. This federal framework isn't just putting up guardrails.
Right.
It actually transforms them, makes them legitimate infrastructure for, everyday commerce, for sending money across borders remittances, and for settling trades right on the blockchain.
Okay.
And there's another angle, maybe less obvious. It locks in demand for US T-bills because that's a primary backing asset.
Interesting.
So my take, this is like the new Eurodollar, but it's happening on chain. We're probably going to see issuers, banks, big fintechs all start converging in this space.
So who wins?
The winners. Probably those who can combine really tight compliance with huge distribution. Think the big exchanges, the established payment giants, the super apps maybe.
Makes sense.
Look, from the Treasury's perspective, they found this sticky foreign demand machine for U.S. debt and for crypto. It's arguably the clearest path it's ever had towards everyday payments.
Wow. Okay. That definitely sounds like a foundational piece falling into place. And speaking of foundational shifts, let's pivot to Ethereum, specifically BlackRock's spot Ether ETF. Ugh.
Yeah, that's been making waves.
Big waves.
Yeah.
They just blew past $10 billion in assets under management. Became the third fastest ETF in U.S. history to do that.
Incredible speed.
And we saw record weekly inflows into eSpot ETFs, even while Bitcoin ETFs seem to cool off a bit. What's this flow shift telling us? What's the significance there?
Well, what's really interesting, I think, is that institutions seem to be finding a specific role in their portfolios for, let's call it, yield-enabled crypto.
Yield-enabled crypto.
Yeah,
Right.
especially after the Pectra upgrade, that's the one that made withdrawing staked Ether easier.
Yeah.
The perception of ETH is changing. It looks less like just, a purely speculative bet and more like a Wall Street packaged cash flowing programmable commodity.
Programmable commodity. I like that label. It suggests a much broader narrative shift for Ether itself, doesn't it?
It really does.
So what does that new narrative mean for how big money might approach Ether now, maybe compared to how they see Bitcoin?
I think the narrative is definitely shifting, quite profoundly, actually. Bitcoin is increasingly seen as the reserve collateral, right? Like digital gold.
Okay, the store of value.
Exactly. While Ether is being valued more as productive compute, it's a network that actually generates yield and powers applications.
Productive compute.
So if ETH keeps pulling in these big flows when BTC pauses, maybe the next dominant investment strategy for institutions, the sort of up-only meta they talk about, could be this kind of barbell approach.
A barbell.
Yeah, like holding BTC reserves on one side and ETH yield on the other. It points to a more nuanced understanding from institutions. They're seeing different assets playing different, maybe complementary roles.
That's fascinating evolution in thinking. Okay, now for something that absolutely set crypto Twitter, or X, on fire.
Oh, yeah, I saw that.
The news about an early era holder selling 80,000 Bitcoin, worth like $9 billion through Galaxy. The reaction was intense, right? People yelling capitulation, old guard losing faith. What did that huge sale really tell us about the market?
Look, it definitely raised questions, but I think you can hold two truths here at the same time.
Okay.
First, the fact that the market could actually absorb a sale that big, that historic, without completely collapsing, that shows incredible resilience, real maturity and liquidity.
It didn't break.
Didn't break. But second, if we see more of this original gangster supply, these really early coins start moving, it definitely pushes that debate about minor fee security and, long-term holding incentives right to the front.
So despite the panic maybe on the timeline, you're saying this wasn't capitulation. What does it suggest about the health of this bull market then, if we cut through the noise?
My take, it was definitively not capitulation. It was proof of market depth. Simple as that.
Proof of depth.
Yeah. The fact that the price held on to higher lows after a $9 billion chunk of Bitcoin changed hands, that tells me the bull market is probably healthier, more resilient than a lot of the immediate reactions suggested. Seeing the market just sort of shrug that off, that's a powerful signal. It was like a stress test, and it passed.
A $9 billion stress test. Okay. Let's shift again to another part of the ecosystem known for pushing speed limits, Solana.
Always Solana.
They just made a big move with this SIMMD 0286 upgrade proposal, increasing block compute limits pretty dramatically from 60 million to 100 million units. What's the main goal there?
The goal is pretty clear. Fewer bottlenecks on the network and just more headroom for consumer apps to run smoothly.
More room to breathe.
Exactly. It fits right into Solana's whole philosophy, which is basically press the gas, don't tap the brakes, keep pushing performance.
Right.
The idea is more capacity on chain should mean fewer of those frustrating spikes in congestion, fewer failed transactions. And it's an important if the underlying networking and the client software upgrades can actually keep up with that higher throughput.
That seems like a big if. It's a bold move, like you said, pressing the gas. What are the risks versus the rewards here if that infrastructure doesn't quite keep pace?
Well, look, if user growth keeps accelerating on Solana, this move basically buys them time. And it reinforces their narrative of being the high-performance chain.
Okay, buys time and narrative.
Right. But you hit the risk. If the tech boost outruns the infra hardening, as they say, if the network stability or client performance can't handle the load smoothly, then the critics get more ammunition, they'll point to instability. But honestly, Solana just refuses to be boring. And, that's probably why builders like shipping there first. They like that aggressive push.
Never a dull moment. Okay, finally, let's talk about something absolutely crucial for crypto. Mass adoption. Distribution is key.
Always is.
And Telegram just made what feels like a huge move, rolling out a native self-custody wallet to 87 million users in the US, right inside the chat app.
Yeah, that's a big one.
What's the real significance here? Bringing crypto to potentially that many people that easily.
It's fundamentally a massive distribution play. And the significance comes down to that old tech saying, distribution wins.
Right.
Think about it. Apple and Google, they own the app stores. But Telegram, they own user intent within their massive messaging graph.
Their own intent.
Yeah.
Interesting way to put it.
Yeah. This lets crypto basically piggyback on that existing social graph for payments, for gaming, NFTs, tipping friends, all that stuff. And crucially, you don't need a separate browser extension. You don't need another app. It's just there.
That sounds incredibly seamless. Could this be it? The sort of long-awaited super app moment for crypto, at least in the West.
My take, yeah, absolutely. This feels like the first true Western super app move for crypto.
Wow.
Think about the scale. If even a small percentage, like single-digit % of Telegram's US base starts actually using that wallet, starts transacting, then TON, the open network that Telegram uses, it basically becomes the consumer chain to beat almost overnight. It's just such a direct, simple, integrated path to crypto for millions of people, cutting out so much of the usual friction.
Incredible potential there. Okay, wow. We have covered a lot of ground today.
We certainly have.
We talked regulatory clarity for stablecoins with the Genius Act, Ether getting redefined for institutions as this programmable commodity, the market showing crazy resilience, absorbing that $9 billion Bitcoin sale. Solana pushing the limits on speed with SIMD 0286, and now Telegram potentially onboarding millions via their chat app. These aren't just random events, are they?
Not at all. They feel very interconnected, like threads weaving together.
Yeah, forming a new, maybe stronger fabric for digital assets.
I think if you connect these dots, look at the bigger picture, it really shows crypto evolving, moving beyond just, niche speculation. We're seeing real steps towards mainstream utility, serious institutional adoption, and much more robust infrastructure being built out.
Definitely feels that way.
So maybe the final thought for you listening is this. With these foundational pieces clicking into place, the regulation, the institutional understanding, the scaling, the distribution, what comes next, what kinds of new applications or maybe totally new financial products could emerge and really take hold in the next year, built on this stronger base?
That is something to really chew on. What gets built next on these foundations?
All right, that wraps up another deep dive. Thanks for joining us as we explore this constantly evolving space. Keep learning, keep exploring.